today we got another company breakdown. As you can see, we are doing LuLulemon today. But before we get into that, we gotta show the fit. You know what I'm saying? So we got this red beanie. I don't know where I got it from. Little cream tee, some little track pants I got from whatchamacallit. I ain't gonna lie, I got these from Goodwill twin. And then I would do the leg thing, but my leg's kind of sore, so we're gonna do it like this. We're rocking you know what I'm saying? And I know Lululemon logo ain't got no yellow in it, but I felt like the red and white was too boring. It's just the red and white was too boring, so I had to throw a little bit of flavor in there. You did. But yeah, let's move this out the way. You know what I'm saying? But yeah, man, Lululemon. Ticker symbol LULU, Lulu. It's in the consumer cyclical sector or consumer discretionary, whichever you want to call it. The retail industry, and it has a market cap of 33 billion, which puts it in the large cap category. Right. So, company profile. Lululemon Athletica designs, distributes, and markets athletic apparel, footwear, and accessories for women, men, and girls. Lululemon offers pants, shorts, tops, and jackets for both leisure and athletic activities such as yoga and running. The company also sells fitness accessories such as bags, yoga mats, and equipment. Lululemon sells its products through more than 700 company-owned stores in about 20 countries, through e-commerce, outlets, and wholesale accounts. And the company was founded in 1998, and is based in Vancouver, Canada. It was founded the same year I was born, so it's been around for 26 years. And the CEO is Calvin McDonald. And we will talk a little bit more about Calvin McDonald at the end. I always hold the CEO for the end. Right? So the fundamentals of this company, it has a PE ratio of 20.9 versus an industry median of 18.7. Your PE ratio is your price to earnings. It's how much you're paying in the stock price per dollar of the company's earnings. The cash to debt ratio of 1.1, which is pretty decent. They have about $2.2 billion in cash, and they have $1.48 billion in debt. Their WACC versus their ROIC, your weighted average cost of capital versus your return on invested capital, how much it costs you to borrow versus how much you get back per dollar. So it costs them about $9.37 to borrow a dollar, and they get back about $38 for every dollar that they put out into the ether for investments, right? They have some pretty good net margins. They have net margins of 16.34% versus the industry median of 3.38%. So you can see they're killing the game when it comes to margins in their particular industry. They have free cash flow of $1.6 billion, and they've been growing their free cash flow over the past 5 years at a rate of about 19.3%. So I'll go ahead and say 20%. I'll round that to 20%. Revenue, $9.6 billion, and they have a 5-year growth rate on their revenue of 26.4%, which really puts Lululemon in that elite category for growing their revenue. That's some amazing growth. They do not pay a dividend, which I'm not going to say I was surprised, but I was just kind of expecting a small dividend, but they don't pay a dividend, which, now that I think about it, they are still a relatively new company. 26 years is not a long time for a business if you really think about it. So yeah. Yeah. Their return on equity is 41.77% versus a 5.73% industry median, killing the game. Return on assets, 24.48% versus a 2.25% industry median. Again, killing the game. They have operating cash flow of about $2.2 billion, and their earnings. Again, I like to do earnings with non-recurring incidents and with non-recurring incidents. So a non-recurring incident would be something like an acquisition or something like that, where you spend a lot of money at one time. So with them, they have if you include those in the earnings, they only beat earnings. Well, I'm not going to say only. They beat earnings 6 out of 8 times, which is still good. But if you don't include those and, just look at regular everyday business activities, things that are constant, they have beat earnings 8 out of 8 times. So, perfect. A little bit about the business model. So they're an omni-channel retailer, which most retailers are. If you don't know what omni-channel means, it's just basically how you distribute your product to your customers. So they have two main, and they have five that they consider other. So they have their company operated stores, which is your LuLulemon, stores you walk in, and they have e-commerce, which would be their website. And then they have other outlets such as temporary locations that they pop up during, maybe holiday times or something like that. They do wholesale. They have, I guess they might give some shipments to send to outlet malls. They have this thing called Like New, where you can, if this was a Lululemon shirt, I could send it back to Lululemon and they'll test it and make sure it's of good quality. Then they'll put it back out to sell again, which I think is pretty cool. And they have license and supply arrangements. Social media is their primary means of advertising. And they have, one thing I learned I thought was interesting, they have third-party inspections and testing on their products, so they don't actually test and inspect their clothing and things themselves. They only actually own one distribution center, and that's in Ohio. All of the other distribution centers are leased. I don't think I saw, well, I think it was there, but I didn't really write down how many distribution centers they have, but they only own one of them. So as with most retailers, the large majority of their operating profits for the year comes in the fourth quarter, and that's during, your holiday times, Black Friday deals, things like that. And they have a growth plan that they call Power 3x2. So what the goal of this growth plan is to grow their revenue by $12.5 billion by 2026, and they will do that by doubling men's sales, doubling digital sales, and quadrupling international sales. And what I will say is their international sales have been growing at a crazy rate, which you'll see later. And they have also stated a lot that their brand is underserved from the male community, and they would like to grow their brand reputation with the male demographic. So they are putting that plan to action. So this is how their income is broken down by business segment and by geographic segment. So as you can see, women's products make up the large majority of their revenue, with about 64%. Men's comes in at 23.4%, and there are other categories, which I guess would be like workout material and stuff like that. Workout equipment and things of that nature is 12.7%. And if you look at their income breakdown geographically, you can see most of their revenue is derived from the United States, which is 66%. So remember, they said part of that growth plan would be to grow the men's and the international sales. And you can see why. Canada is 13%. You have the China mainland, which is 10%. You have Hong Kong, which is really small. And then you have other geographic areas, which adds up to about 9% of their revenue. So their key performance indicators were not specifically stated, but I just went off of the things that they noted in their 10Q, which is their quarterly report, the things that they noted that they had changes in. And those were things such as your net revenue, comparable sales, gross profits, income from operations, gross margins, and operating margins. And if you don't know what comparable sales is, and I actually look up the actual definition, because sometimes you know how you know what things are, but you don't know how to really explain it to people. So I'm going to look that up and give y'all the actual definition. So comparable sales, also known as comps or same-store sales, is a retail location's revenue in a recent accounting period compared to a similar period in the past. So, yeah. So, in their most recent quarter, which would have been their Q2 performance that they had just recently reported, I think in like June or August, I think. So their net revenue was up 7% to $2.4 billion. And this is a quarter over quarter, I want to say. And so the Americas was up 1%, and their international sales was up 30%. So in line with that, Power 3x2. growth plan. Their comparable sales were up 2%. So in the Americas, their comparable sales were actually down, and their international sales were up 21%. Gross profits were up 9% to 1.4 billion. Gross margin was up 80 basis points. Their operating margin was up 110 basis points. Their income from operations was up 13% to $540 million. Their earnings per share was $3.15 versus $2.68 that same quarter of last year, 2023. They did $583 million worth of share buyback, so buying their shares back off of the stock market, and they opened 10 new locations. And so some of the negatives from this recent quarter performance was that they lowered their revenue and earnings per share guidance for the rest of the year, for the year 2024, and they missed on revenue guidance from the previous quarter that they stated. So they expected 2.4 billion. They came in about 2.3 billion, which is not a big miss, about $1 million miss. So do with that information what you may. So in 2023, which was their 25-year anniversary, so the things they've done in 2023 versus 2022, their net revenue was up year over year 20%. Comparable sales was up 14% year over year. Their gross profit was up 25% to $5.6 billion. Income from operations was up 61% to $2.1 billion. So in the Americas, there was 7% growth. In the China mainland, it was up 71%. And the rest of the world, that's what ROW stands for, the rest of the world was up 95%. So they really are digging into that growth plan of growing those international sales. That net income was up 81%, and their diluted earnings per share was $12.20 versus $6.88%. So almost 100% growth in earnings per share year over year. And some of the accomplishments of 2023, they opened 56 new company-operated stores, the majority of those being in China. That's where they're seeing the most growth. They launched Wondermost, which is, and I wrote it down here. I want to tell y'all exactly what that is. They launched Wondermost, which is a bodywear collection for women, and they launched Steady State and Soft Jersey, which are leisure categories for men. And they started a new textile partnership to recycle apparel waste and make it into like nylon and and polyester. So I feel like that was cool of them to do. So these are some things that I took note of that I didn't really think fit in any category, but just things I felt like that were good to know about the company. So they have 711 stores in 20 countries, and their first standalone store came in 2000, and I'm pretty sure it was in Canada. I didn't write it down, but I think I read it was in Canada. They got their name because, so the guy who named LuLulemon, it was something about the Japanese, and they have, none of the Japanese marketers would name things or like use the letter L in the marketing because I don't think the Japanese, I think they said the Japanese don't have like a letter for the letter L like we do in the United States, and it's hard for them to pronounce. So it made it like exotic to them. And that's why he named it LuLulemon. No really other name in that. No other reason than that. 70% of managers are grown internally. So 70% of managers, come up and work their way up to managers instead of hiring people from outside to be managers in the stores. And that's always a good sign. Managers are responsible for like the store layouts and what else? I wrote this one down on my paper. So managers are responsible for store layouts, the color coordination of the stores, and the community involvement in the stores. They joined the NASDAQ in 2018, and in March of 2022, that was when they first added shoes to their collection of products. So I'll say 1998, and then 2018 will be 20 years. So about 24 years. later they started selling shoes. Fitness instructors. So if you're a fitness instructor and you have like a brand deal with Lululemon, you actually get 25% off of your orders. So if you like that Lululemon, start teaching some fitness classes, get you a little discount. You feel me? So they were actually the official outfitter for Team Canada in the 2024 Olympics. I think it's for track and field, if I'm not mistaken. And like I said before, they're looking for growth in their men's products. And one negative thing that I did notice was that their net revenue growth in the United States is slowing. So in 2021, they had 40% growth. 2022, they had 26% growth. And in 2023, they had 23% growth. So I'm interested to see what that growth looks like in 2024. And with the current environment going on in the United States right now with the economy and everything, I'm expecting that revenue growth to be lower as well in 2024. Or maybe like on pace or something. So the risk factors with this business, in general are the same when you're talking about retailers. So changes in consumer preferences, defects with the products. For Lululemon specifically, if they can't execute their plan with international growth, that will hurt sales and hurt their business model, their growth plan, because that is a big area of improvement for them. Obviously, the supply chain, and I put port disruption right there because we just had a situation where the port workers were going on strike, and I just wanted to show how those real world situations can actually affect these businesses. So businesses like Lululemon or like anybody who's getting things in from across the seas are affected by things like that. That's why the port strike was so important. Then you have the cost of raw materials, obviously recessions and trade restrictions. When you are dealing internationally, those trade laws and tariffs and things like that, those matter a lot to these businesses because, if there's tariffs on whatever company and it costs that company, costs Lululemon more to get things in, they probably will pass that cost on to you as the consumer. And let's say it costs them $2 more per whatever to bring it in to the United States, they're gonna charge you that extra $2. You feel me? So how their manufacturing and supply structure is set up, they have 49 manufacturers, and the top 5 make up 55%, and the largest one is 17% of their manufacturing. So 42% of their manufacturers in Vietnam, 16% in Cambodia, 11% in Sri Lanka, 10% in Indonesia, and you have 8% in Bangladesh. So, and they have 67 suppliers of their fabrics. The top 5 supply them 52%, and the largest one making up 19%. And 40% of those suppliers sit in Taiwan, 26% comes from China, and 12% comes from Sri Lanka. And this is the first time I actually seen a company that does business in Sri Lanka from all the companies I've looked at. So I just thought that was interesting. So let's talk about leadership. So their board of directors, and you can get this information from the proxy statement. And there are more categories in this, but these are the ones I feel like were pretty important. 8 out of 10 of them have some type of experience in international markets. 8 out of 10 of them have retail experience, and 5 out of 10 of them have retail and technology. And I put technology here because in this day and age, every company has to have some type of website or app or something like that, just because of the way the world is going. You have to have some type of experience in that area or some type of, guidance in that area. And between the executive suite and the board of directors, they all have some type of experience, sit on the board have worked at or had some type of dealings with any number of these companies that I'm about to list out that I have listed here. So you have Sephora, Sears, Disney, Marc Jacobs, Adidas, Snapchat and Facebook, Google, Lyft, Tesla, Apple, Starbucks, Microsoft. You have Levi's, Visa, and Lifetime Fitness, just to name a few. So they have a lot of different experience from a lot of different areas of sitting on their board of directors, which is always a good thing, bringing in different perspectives from different, that's what a board of directors is for, to bring in, different perspectives on how the company can maneuver this way or what can help the company in this area and things like that. So a good, broad, diverse set of experience from a board of directors is always a good sign. And lastly, we have the CEO, Mr. Calvin McDonald himself. I couldn't find really any information on his, personal and early life. But as far as, his professional life goes, he is 49 years old. He joined LuLulemon in 2018, so he kind of worked his way up through the company to be the CEO. He has served as the president and CEO of Sephora. And from 2013 to 2018, he was the CEO of Sears Canada. And he served 17 years at Loblaw Companies Limited, which is the largest retailer in Canada. And from 2016 to 2020, he sat on the board of directors at Cole Haan, which is like a footwear brand. And yeah. And he has a Bachelor's of Science from Western University and a Master's of Business at the University of Toronto. And when I'm looking at the CEOs, I really do like to try to find what I can about their early life or find interviews where they're not specifically talking about the business, or maybe they just talk about, their thoughts on things in general or talk about themselves. I try to find that a lot of times, and I just couldn't really find that on him. But because that says a lot about how they will lead the business and their outlook on things, and what type of leadership style they have. But that's it. That's my breakdown of LuLulemon, and tune in next week for the next breakdown. Peace.